Welcome to Short View Trading. It's Monday, 7th of November. It's around 9 a.m. London time. What matters for markets? What should you be focusing on if you're a swing trader of equity indices, trading S&P equity futures, NASDAQ, similar, on a 1 to 2 week basis? That's the purpose of this video. That's what we want to talk about. So let's dig in. What matters today? Well, is the dollar topping out? Is gold finding a floor? Have interest rate futures priced in all the rate hikes they need to over coming months? Those are critical questions for the equity market, because if you look at the chart of the dollar we're putting up in front of you now, the dollar index, it behaved very well on Friday, in fact giving back quite a chunk of its gains, trading sideways over the last couple of weeks, looking like it might well be topping out. And of course, over the course of this year, a strong dollar has been a major headwind for equity markets, so a dollar rolling over and softening is of course a tailwind for equity markets. So that's a key question. What's the dollar up to? Equally, what about interest rate futures? Because last week was a big week. We had the Fed, we had hawkishness from Jerome Powell, we had a pricing in of a few more hikes, but at the back end of the week that eased off a bit. And as you can see in the chart in front of you now, if you look at Fed funds futures, they eased up on Friday, gave back some of those rate hikes that were priced in. So are we topping out in that respect? Have we reached peak Fed hawkishness? Are we reaching peak interest rate expectations? All of which would be positive for equity markets, and the bulls have been outlining that bull case over the course of recent months and arguing that it's about to come. So that's something to watch closely. And then on top of that, gold. Look at the chart of gold, finding fantastic support on Friday, rallying sharply from that 1620 level Thursday, Friday. It's tested it 3 times in recent weeks. It's looking like pretty solid support, and it was a big strong move on Friday to the upside for the gold price. Now, why does that matter? It matters because, of course, gold is a fantastic indicator of interest rate expectations. If it looks like those expectations are softening, gold rallies sharply. It's another indicator confirming what we saw on Fed funds futures on Friday. So all of those factors support our expectation that we laid out in last week's video, that we're in a bear market rally. We've shifted risk regime from risk off in September as we sold into those late September lows to risk on over the course of October, and as we go into November. A bear market rally is alive and well and continues. And in fact, the price action at the back end of last week, I think, demonstrated that. Hawkish Fed on Wednesday, hawkish Jerome Powell in particular. I know the statement was slightly less hawkish, but the language from Powell in the press conference clearly hawkish. Despite that, on Thursday, Friday, the market finds its feet and has a bit of strength on Friday, rallies quite nicely. So the market looks resilient to the news flow. So the bear market rally looks alive and well, despite last week's negative performance on the NASDAQ, as you can see on the weekly performance chart, and indeed the S&P 500. And interestingly, European indices, you can see in the weekly performance chart we're putting up now, performed very well last week, all up really over the course of the week. So to see how we're playing this market, how we're implementing 1 to 2 week trading positions on equity index futures, how all our models are evolving, which we look at each and every day in the Daily Rag, along with our commentary on the equity market. To see all that, please subscribe to the Daily Rag via the website, or the Rag Trader as it's also known. Or if you're a subscriber, please access that via the website. Or if you're interested in a free trial, please click on the link below and sign up. Name and email address, no credit card details required. So what are we watching today and this week? Well, there's a bunch of key themes. We've got the US midterm elections on Tuesday. At the moment, it looks like Republicans are going to take the House and Congress. That'll be watched closely for the potential for gridlock in terms of policy in Washington going forward. It's often considered positive for equity markets. On top of that, there's a lot of US macro data out this week. All eyes on CPI, consumer price inflation, out towards the end of the week, and the Michigan consumer sentiment first estimate. On top of that, you got NFIB ahead of that, and 1 or 2 other bits and pieces. And then elsewhere in China, lots of data out there, including inflation and probably total social financing, monthly lending over the course of this week. On top of which, of course, finally, earnings are continuing. US earnings season continues this week. Lots more companies reporting. So that's your morning market hit for Monday, 7th of November. Please do subscribe to these videos. Simply click on the subscribe button, or follow us on LinkedIn, Facebook, and or Twitter. Thank you for listening. Stay safe. Trade well.